A lot of people assume gambling is an off-the-books type of activity, but gambling losses and wins count as income and expenditures, both of which the IRS is interested in. In this video, we'll go over some tips for deducting your gambling losses and income. Start by reporting. In order to write off your gambling losses, you will have to accurately report the amount of money you made from gambling in a given year. You essentially have to prove you lost this money. The best way to show this proof is by reporting your total gambling income. Keep a diary. The IRS requires frequent gamblers to keep track of all their winnings and losses. First things first, you'll want to date every gambling experience. You'll also want to list the address of the place you've gambled as well as the type of gambling itself. Detail how much money you've won and lost per gambling experience. You may even want to list who was with you when you gambled and the form of the transactions like cash, card, check, etc. Know what qualifies. The IRS describes gambling losses or winnings quite broadly. In general, these refer to any cash earned or lost in raffles, lotteries, poker, and casino games, and sports betting, including horse races. Most people assume gambling wins and losses occur only in casinos, but if you also like to visit the horse track regularly, you may have even more losses to deduct. Backup losses. When in doubt, it's always wise to back up the losses you've kept track of. You can do this by holding on to any receipts from transactions made at racetracks or casinos. The same goes for records of credit card and check payments. Some gaming organizations will also have to submit a W-2G, a tax form that officially reports gambling winnings on your behalf. Most of these are submitted for winnings more than a certain amount, such as $1,200. If you aren't sure if you received a W-2G or not, contact the gaming organization that issued your winnings. Other tax credits. Are you looking for ways to maximize your deductions further? Make sure you explore all other tax credits available to you. This means itemizing like a boss. Consider all other tax situations that apply to you, including healthcare expenses, education, business costs, and more. These can lower your tax liability, helping you hold on to more of those gambling winnings in the long run. Loss deduction limits. There is one golden rule to keep in mind when deducting gambling losses on your tax return. You can't, unfortunately, deduct losses that total more than your winnings. So if you made $10,000 on gambling last year but lost $12,000, you can only deduct $10,000 in losses, nothing more. This can be a bit of a bummer, but don't worry. You will be itemizing anyways, and this can set you up for some other great tax credits. The tax deadline. It's always wise to file your taxes before the IRS's deadline on April 15th. Do your best not to save the filing until the last minute. This is especially important because you will be itemizing your expenses, which can take a lot of time. To save time and boost accuracy on your itemizing, we recommend using e-filing software. Filing your returns electronically can keep you from making any errors, and it can also help you explore other tax credits. At Silver Tax Group, we are the real tax attorneys. We have helped scores of clients eliminate or reduce tax problems. If you've run into any issues with reporting your gambling losses or winnings, we're here to help. With Silver Tax, you get a complimentary consultation to start things off. Contact us today, and if you enjoyed this video, be sure to like, comment, and subscribe.